If you stop and think about it, there's only two major reasons why you're going to be building out your personal credit in this financial system. Really only two reasons. And I want to go over what those two reasons are, and I want to give you the pathway to actually executing on those two reasons to make sure that while you're building credit, you're doing it effectively and that you're doing it in a way that gets you to the end game you are looking to achieve, and you're doing it in a way to make sure that you don't end up drowning in debt or hurting yourself financially in the process of doing so. If you have established credit, this is still valuable for you because this is going to make sure that you're aligning your personal finances, or at least can make adjustments in your personal finances and your credit building goals to make sure you're going where you're supposed to go and minimizing any future losses or headaches along the way. If you're brand new to credit, this is going to be very special for you as well, because this is going to lay down the framework and the pathway to doing so with minimal hiccups, getting there as fast as possible and without steering down the wrong direction in the process of doing this. I'm going to give you two schools of thought, and they're going to be very valuable. For some quick context on who I am, I'm James Phillips. If you're brand new to this channel, then I want to let you know that I have over 13 years at the time of this recording in retail banking. I have a FINRA investment license. I have an active life insurance license. I have an active mortgage license, small business certified on small business banking and small business credit. I have pretty extensive overall career path in financial services as a whole. I've helped clients on the consumer banking and small business side, small business credit and consumer credit as well. And I personally have FICO scores that are above the 780 range on average. Of course, there's dozens of FICO scores, as you know, but mine's are over the 780 plus mark myself. So I am telling you this as somebody with a career path in finance and banking and credit, and somebody who personally has gotten themselves there. Hopefully that's enough context for you to pay attention to the rest of this video. So there's two schools of thought that I've been kind of prying out on this channel, and that's been the Dave Ramsey lane or the Robert Kiyosaki lane. When you're building out your personal credit, honestly speaking, when you stop and think about it, you're looking to go one or two pathways. If you're going Dave Ramsey's route, he wants you to avoid debt all the way, all together. Now, debt and credit building are actually two different beasts. And believe it or not, part of what I'm going to teach you in this video is you actually can build out a pretty decent credit profile and get a really high credit score without actually going into debt. Now, on the other side of the equation, you have Robert Kiyosaki, who I say all the time will show you all 32 of his teeth if you ask him, because he's going to tell you I'm over $1 billion in debt. And maybe it's even more than that at this point in time, because he's played the game of credit to play the game of leverage, business ownership, asset acquisition. He's played the game to get his hands on, to scale up and grow businesses and get his hands on assets that are going to grow more in value than he's going to pay on the debt that he used to get them. That's two different lanes and worlds when you're talking about building out personal credit and building out your personal finances in the end game. What are you looking to accomplish overall in your personal finances? That is two different worlds. That's what I want to break down for you in this video. If you're looking to go the Dave Ramsey route, and we're talking about building out personal credit only because employers use personal credit, insurance companies use personal credit, various forms of financial needs and services that we're going to need throughout our lifetime will lean on our personal financial reputations, aka our personal credit reports, to approve us or to quote us a rate on what we're asking for. And so even if you don't plan on getting any debt and you want to pay cash for everything else going forward in your life, you're going to still need credit in the United States. Point blank, period. Now, on the other end of that equation, if you're looking to build personal credit because you want to play the game of leverage, that's a different beast. You need to build out a notably different personal credit profile, and you need to play that game a lot deeper than somebody going a Dave Ramsey route. We're going to start with the Dave Ramsey route. How do you build personal credit without actually going into debt to do it? The first thing we need to talk about is the way to build out personal credit in general. There's going to be two different, major areas or major metrics that are going to determine your credit score. There's 6 metrics that determine your credit score, but those 6 metrics are going to be calculating 2 different lanes, basically, product-wise or trade line-wise on your credit report. That's going to be revolving credit and installment credit. For the most part, every trade line you're going to use or build out or work with is going to fall into one of those 2 categories. And honestly speaking, you can get both of those met without going into debt at all to do it. The first thing you need to understand on the revolving side, and I need to put this out there first because many people get this terribly confused, credit cards are actually not debt products. They are spending tools. Some of you, that's gonna be mind-blowing, but believe it or not, credit cards are not designed primarily as debt products. That is the reason credit cards are so damn expensive when you use them as debt products. They are designed to be more efficient spending tools. They are designed for you to use them, pay them off in full. That is the way they're designed. They're intended to give you some extra cash flow. They're intended to give you more spending power, but they are not designed as debt tools originally. And that is why there's so many fees and exceptionally high interest when you carry balances on credit cards. Now, there's 0% offers on them, etc., intended again to entice those who need debt-based tools or debt-based functionality to spend on those cards. Banks understand this. They still want that clientele base. So there's 0% offers, there's balance transfer 0% offers, etc. But on the surface, at face value, credit cards are not debt tools. If you are looking to build out your personal credit, knowing revolving credit is going to be one of the major sides of building out personal credit, you're going to end up using credit cards. They're the most accessible and the most functional revolving accounts you're going to put your hands on. That having been said, you technically don't have to get an ounce of debt using credit cards. And that's even if you get 100 credit cards throughout your lifetime. Technically speaking, you're supposed to use them and pay them off in full. And that technically means you never use debt. Yes, you're spending the lender's money, but you're technically going to turn around and put your own money down on it to pay it off. So if you want to be technical, you're using debt. You're borrowing a credit card company's money initially, but you're intending to do so to turn around and put your own money back down on it in full. So in essence, you never really got into debt to use a credit card. And with that having been laid out for you, that's one way you can build credit, great credit, without going into debt. Because technically speaking, you're simply going to be using your own money. You're going to use the lenders and turn around within days, weeks, or no more than 30 days or so and put your own money back down on it. That takes care of the revolving side of building credit under Dave Ramsey's eyes, even though he'll tell you never touch a credit card. But you can still follow his underlying philosophy of avoiding debt by simply using credit cards as intended, which is a spending tool. Now, installment loan history. Now, you may be thinking with installment loans, auto loans, mortgages, personal loans, recreational loans, etc. You'd be correct. There's actually a simpler product that will solve installment loan history perfectly fine if you use it properly. That's going to be savings CD secured loans. Once again, you're not actually going into debt. Technically speaking, when you use savings and CD secured loans, you're going to be putting your own money down and you will get lent debt on the other side of that will be collateralized by your deposits. Once again, you are putting your own money up in this process. And if the goal is only to build credit, you can turn around and pay down a significant chunk of that money lent out to you, 80 to 90% of it, and finance the rest of it basically over the course of whatever term you pick. We'll call it 3 years to 5 years or so. If you're looking to just build the credit history, you're gonna pay a chunk of this down and then you're gonna turn around and finance the little small payment that will be left on that savings CD secured loan, only to establish the payment history and the other metrics that installment loan will satisfy in utilization. The only reason you're going this route, again, is to create credit history on the installment loan side and not technically, or at least officially or unofficially, however the hell you want to look at it, going into debt to do it. Meaning you actually borrow money to finance a car. You actually borrow money to finance a home. You actually borrow money on a personal loan for some recreation or debt consolidation use, etc. You're going to be using savings CD secured loan, meaning that money is already there to pay that debt off. And you're basically going to use the money they give you to do so. Once they lend that money to you, you drop it back in a checking account and let them auto draft it right out of the account. Very simple. So I want to put in context, this is how you build out personal credit with installment and revolving accounts and get yourself to a very high FICO score, very robust credit profile, and you technically are not getting into any real debt doing so. You can still follow Dave Ramsey's no debt strategy and build out personal credit. So again, when you go to get various forms of insurance, an employer, depending on your industry, is pulling your credit to make sure that you are basically have a good personal reputation and financial reputation, etc. For the various means that credit is pulled that is not debt related, it, because there's a lot of them, you still have good personal credit. Now, let's go over to the Robert Kiyosaki side of this. If you're looking to build out, get into small business, play the leverage game, buy assets, get into real estate investing, etc., then you are going to be playing a totally different game. You're going to be playing a game of leverage. That is going to be a different personal credit profile. Now you're going to need to get into debt to do this. You're going to need to show you can competently pay a car loan off. You're going to need to properly show that you can pay a mortgage, properly and effectively show you can pay a personal loan, multiple personal loans, and you're going to want to use savings CD secure products as well. Now you're going to want to show competency in actual debts, because that is going to be the comparable credit when you go to get an investment loan for rental real estate from an actual banking institution, when you go to get a mortgage on a primary residence or whatever the case may be, when you go to get business funding to start, grow, scale a business, they're gonna wanna see comparable credit, not just with credit cards. Yes, you want it with credit cards, but you also want it on the installment side, because you're gonna be getting installment loans, you might be getting lines of credit, etc. And they're gonna wanna see a robust, diverse credit profile that will expect that you've gotten debt, paid off debt, managed debt over extended periods of time. This is why it's important to understand how and why you're building out your credit profile. What is your end game? What type of game are you looking to play throughout your financial life, throughout your financial journey? I hope you stuck through this even if you're established, because this is different. You don't have to go into debt if your goal is not to be a business owner, not to be an asset owner, not to be invested in various forms of real estate, etc., buying and acquiring businesses. If that is not your goal, you don't need to be in debt. You don't need to get a complicated credit profile. You don't need to borrow. You can play the game of getting a good job, good income, low DTI, pay cash for everything, save up before you buy the car, save up before you buy the house. You're playing a longer game. I think you can tell, you know that, especially with the cost of cars and the cost of homes in today's economy. But again, if you're adamant about not paying interest, not going into debt, then it's doable. It's doable to build out a great credit profile and still never actually get into debt. If you're looking to play the Robert Kiyosaki game, acquire assets, stack assets, grow a business, stack businesses, you're playing a totally different game. You need to get into debt and you need to manage it effectively for a really long time in order to get into this game to where you're getting access to capital, to buy assets, buy businesses, grow your income, scale revenue, and scale and appreciate assets over time. Hopefully this brought context to you, because this is not talked about by almost anybody else in the personal finance space, small business, business funding space, etc. You're not hearing much context around this kind of thing. I'm bringing you unique insights. So hopefully for those of you who stuck through, comment down below and let me know how you plan the game yourself. What are you doing? And what is your goal when it comes to personal finances? Are you in a situation where you're literally just looking out to build out your personal credit profile because you have goals and ambitions around, getting the best rates in terms on different non-debt related credit criteria, products and services, or career path? Or are you in the game of actually building legacy wealth, starting, growing a business, acquiring various assets, etc.? Comment down below, what lane are you in? What's your goal with your personal finances? Where are you at on a journey right now with your personal finances? And how what I laid out for you is applicable for you? Add to the conversation. If I didn't cover something, please comment it down below, expand on the conversation. If you have criticisms or critique, that's welcomed as well. Comment it down below. Other than that, to all my new viewers, welcome in. To all my pioneers, welcome back. Thank y'all for sticking through the video, staying focused. I want you to keep supporting this channel so this channel can keep supporting you. You know the different ways to do that. Like, comment, subscribe, and get focused on other content relevant on this channel that is relevant for you. Binge out. I have a ton of videos covering a ton of topics when it comes to personal and business finances. So I want you guys to continue to support the channel by watching and consuming more content to educate yourself and advance your personal and business finances. Other than that, I want each of you to stay focused, stay in motion. I'll see y'all soon.